Have you ever wondered if there was a way to invest in everything without spending hours researching, guessing, and hoping you pick the right stocks? What if you could own Apple, Microsoft, Tesla, Nvidia, and thousands of other companies all with just one single investment? That's exactly what VTI offers, and today I'm breaking down why this simple, low-cost ETF might just be one of the smartest moves for long-term investors like you. But before we get to that, if you're new here and you never see my channel, my name is Elliot and I upload videos about investing, the stock market, and I do updates on my own portfolio, which is on the Robinhood app. So if that's something you enjoy, please consider subscribing. I upload videos just like this every 2 weeks. Alright, let's start with what VTI actually is. VTI stands for the Vanguard Total Stock Market ETF, and it's designed to do exactly what the name says. Give you exposure to the entire US stock market. Large caps, mid caps, small caps, and even micro caps, all bundled into one single fund. When you invest in VTI, you're not placing a bet on a single company or even a single industry. You're betting on the long-term strength of the entire American economy. One of the biggest reasons investors choose VTI is for diversification. In investing, diversification is your best friend. It spreads out your risk. When one company struggles, another might be thriving, and you benefit from the balance. VTI holds over 3,500 individual companies across virtually every sector of the U.S. economy, including technology, healthcare, financials, energy, industrials, consumer goods, utilities, and real estate. So instead of putting all your eggs in one basket, you're spreading them across the entire market. Let's zoom in a little closer. As of June 2025, here are some of the top holdings inside VTI. Apple, Microsoft, Nvidia, Amazon, Alphabet, Meta, Berkshire Hathaway, JP Morgan. These are the same companies you find in an S&P 500 ETF like VOO, but the difference is that VTI doesn't stop there. It includes thousands of smaller and mid-sized companies too, giving you exposure to parts of the economy that large cap indexes often miss. Now, let's talk about one of the hidden wealth killers in investing: fees. VTI has one of the lowest expense ratios in the entire ETF world, just 0.03%. That means for every $10,000 you invest, Vanguard only charges $3 per year. Compare that to actively managed mutual funds that often charge 1% or more. That's $100 plus per year for that same $10,000. Over 20, 30 years, that difference could cost you tens of thousands in lost gains. Since its inception in 2001, VTI has delivered annualized returns that match the total US stock market, which has historically been around 8 to 10% depending on the time period. Is it always smooth sailing? Of course not. The stock market goes through crashes, recessions, corrections, but over long periods, the US market has consistently trended upward. VTI isn't a get-rich-quick scheme. It's a get-rich-slowly and safely strategy. One of the most common questions I get is, should I invest in VTI, VOO, or something like SCHB? So let's clear that up. VOO is the Vanguard S&P 500 ETF. It tracks only the 500 largest, most established companies in the US. VTI casts a much wider net. It covers over 3,500 companies of all sizes, from the biggest blue chip stocks all the way down to small cap growth companies. SCHB is the Schwab Total US Stock Market ETF, very similar to VTI with just a slight different index and sometimes tiny differences in holdings or price. So which one is better? If you want exposure strictly to the giants, the Apples, Amazons, Microsofts of the world, VOO is perfect. But if you want to own not just the big names, but also the up-and-comers, the small caps with growth potential, and a broader slice of the American economy, VTI gives you that extra layer of diversification. And if you prefer Schwab's platform or commission-free trading on Schwab accounts, SCHB is a fantastic alternative that serves almost the same purpose. Let's talk about how VTI fits into a well-balanced investment plan. For a lot of investors, especially those just starting out, VTI can serve as the foundation of their entire stock market strategy. In fact, it's common for VTI to make up 50, 70, or even 100% of an investor's stock allocation, depending on their goals and risk tolerance. For an example, if you're young and focused on long-term growth, you might want to aim for 80 to 100% stock allocation with VTI as the core holding. If you prefer more income and less volatility, you could combine VTI with a dividend-focused ETF like VYM, or balance it out with bonds using something like BND. It's simple, flexible, and a powerful way to invest without overcomplicating your portfolio. One of the smartest ways to invest in VTI is through a strategy called dollar cost averaging. That simply means investing a fixed amount at set intervals, whether the market is up, down, or sideways. When prices are high, your money buys fewer shares. When prices are low, your money buys more shares. This approach helps smooth out the emotional roller coaster of the market and makes investing automatic and stress-free over time. Of course, every investment has risk, and VTI is no exception. Because VTI is 100% stocks, it will drop when the stock market drops. In 2008, during the financial crisis, VTI lost over 36% in a single year. In 2020, during the pandemic crash, it dropped over 30% in a matter of weeks. But history shows that the market always recovers, and patient investors who held through the noise were rewarded. It's about building wealth slowly, steadily, and safely. So is VTI right for you? If you want a fund that gives you exposure to the entire US stock market, charges almost nothing in fees, requires almost zero maintenance once you've bought it, and matches for long-term growth of the American economy, VTI is absolutely worth considering as a core part of your investment portfolio. If you found this breakdown helpful, make sure to give it a like, subscribe to the channel, and let me know in the comments below. Are you invested in VTI? And we'll see you next time.